Here is a very controversial take on how to manage wealth. A lot of people will not agree with me on this. I believe there is some truth to it. I personally have followed this approach, and this might come in handy if you have ridden this bull market quite a bit. You might feel that you could be potentially overexposed to crypto now. So here's the idea. The idea is that you can reduce your risk in your portfolio by adding leverage, by adding debt to your portfolio. And the way to do this is to balance out your portfolio. Now here's the point, right? When you're dollar cost averaging into the crypto market and you buy low and you've got maybe 10-20% of your crypto portfolio, of your overall wealth in crypto. You've got 10-20% of your overall wealth in crypto, and now crypto suddenly does a 3, 4, 5x, right? Then you've got a lot of exposure to crypto, much more than you would feel comfortable with, and at the same time, we are potentially in a heated market. So those two things don't really go well hand in hand, right? You want to be heavily exposed whenever we are low to ride the wave, but once we are up there, you want to take some of those chips off the table, right? You want to sell. But that's the issue. The issue is that potentially the current momentum is still very bullish, and you've got a very strong opinion on this, and you actually want to keep riding this wave. What do you do then, right? Let's say you've got 60-70% of your wealth in crypto. You don't want to have all of the exposure to the potential downside, even though you're overexposed. You want to continue riding the positive momentum until something changes. I have done this in the prior bull market. The issue was, again, the portfolio balance, right? I wanted to have, relatively speaking, more of a stock allocation compared to a crypto allocation. So what can we do? The most straightforward way, what most people do, is simply to sell some crypto to buy stocks with it. But again, we want to ride this wave. We actually do not want to exit. So what I did is I took out a personal loan because I had a very, very stable income. I was not worried about the loan whatsoever. I took out a personal loan, and instead of buying a car with it, instead of buying this for some kind of random event, I purchased stock ETFs from this. Now, nothing risky, right? Simply just S&P 500 stock ETFs. I didn't want to outperform the market with it. The sole idea was to balance out my portfolio again. So by taking on that loan, because I didn't have more capital to allocate, by taking out that loan to buy stocks, now suddenly my relation between stocks versus crypto looks somewhat fine again. So I can continue riding this wave without feeling that my wealth drops too much, relatively speaking, because I already have a lot in crypto. And so by taking out a loan to buy the asset that you're currently under-allocated to, and when you've got at the same time a very, very strong conviction that the cash flows will keep coming in to serve the loan, and if the loan relative to the cash flows isn't that high, then this is a very nice strategy to reduce your overall risk without actually having to take off any chips off the table. Currently, I believe we are pretty much in that situation. We have come up quite a lot in Bitcoin. People might have bought a lot at the bottom. They might have a lot of exposure to Bitcoin, but they don't necessarily want to sell. They see this relative to their stock portfolio, and thus you could sell, put this into stocks, you could sell, put this into cash, but you could also do something very unconventional and simply buy stocks with a personal loan. And yes, I have done this, and yes, I'm very happy with this, and yes, I did even make money with that personal loan on the stocks, but that was not the main idea. I would have been even fine if in the end that particular purchase, right, buying stocks with a loan, wouldn't have turned out anything positive. I would have been okay if that would simply just even go slightly downwards, because simply balancing out that volatility by having both of those assets in proper relations to one another, that enabled me to ride more of that Bitcoin wave. And of course, Bitcoin continued to go up. The very, very important thing here is, of course, that you have a very, very strong conviction that Bitcoin is indeed just starting the bull market, right? You need to have solid models. Nobody knows for sure where we are going, but everybody works with probabilities to a degree if you somehow do this academically, right? So everybody has their best guesses. And if your current best guess is that we haven't yet topped out, but at the same time you're over allocated, this might be a very unconventional approach that could work for some people that have a very strong, very reliable cash flow. So if this is something you've never thought about before, feel free to give this a like. A subscribe is of course also appreciated. I publish videos regularly. See you next time. Cheers.